Good morning. It's July 27th, 8:41 Hawaiian time. My last day on Maui. Sad to go as I have been from each island. Didn't want to leave Kauai. I say Kauai in Hawaiian. In fact, didn't want to leave so much that we're ended up going back there. We're going to go back there at the end of the trip. Didn't want to leave the big island. Maui's been wonderful. On to Oahu. This is the scene behind us. There was a swell in the ocean. I guess there's a tropical storm incoming. We were in the ocean yesterday. The waves were crazy. It was fun. Felt a little dangerous almost. So we were thankful just to come out losing a couple pair of goggles, a couple things. So um, just really finding my footing, so to speak, in Hawaii. Definitely going to come back. I've never been before. Enjoying every minute of it, just soaking it in. Today in the markets, I was up early. I went to bed early last night. I was up early, and the pre-market, overnight was bid up. There was a big sell-off though, led by semiconductors right after the market opened, and this is continued. I read the other day that we had a 28-day streak. I don't know if it's true or not of lower highs in the Invesco QQQ Trust. I'll have to look at that. If that was true, today would be the 29th day lower highs. We rolled over. There's a lot of stocks that are beaten up now quite a bit. Some of the optical stocks like AAOI is down near its 200-day moving average. Some of the former leading stocks like SanDisk is almost down 50% from its highs. Still a ways. AAOI is a lot closer to its 200-day moving average. SanDisk has a ways to go. Micron has ways to go to get to its 200-day moving average, but there's weakness in the former momentum leading tech stocks. Alternatively, on the other side of the ledger, software, which is almost the anti-tech stock trade. It's funny. I talked to Jordan sent me a text. Remember Jordan from our group? He's been in and out. He sent me a text. He saw an article that said bonds were too cheap to ignore, and his caption on his text was, "Somebody stole your headline." It says kind of funny. And I was going to say something else about Jordan, but it left my mind. Some birds over here. Jordan's very much momentum oriented, and to his credit, he stepped aside from this some of this tech stock decline recently. Just his gut instinct, his spider instinct, spidey sense. So we're getting oversold in some of those names. And I remember what I was going to say. Jordan said Jordan was actually like a pro Magic player at one point, and Magic the card game. So he's got a very good strategic mind, very good businessman. And Jordan said that I told him in my text response to that, I said, the software is the anti-tech trade. He said, you sound like a Magic player. And I used to play Magic, but it's been a long time. So I thought that was funny. But Adobe's up. It was up over 6% the last I looked. Software in general is stronger today. And you're getting so weakness in the former momentum leaders, but you're getting a rotation under the surface. And along with that, you're seeing what did I take? You're seeing retail participation that I've included a chart here in the note packet. It has really been decimated. So retail investors have walked away from the market because there's been tremendous pain in the momentum tech, mostly tech leaders, but momentum stocks in general. In fact, there's on Twitter just 2 months ago, everybody's posting their P&Ls, their amazing profits, that they had gotten from the right tail market, and now you're seeing the other side of that. You're seeing people post that they've blown up, but they've walked away. So the anecdotal stories have completely done a 180. In my last two podcasts, I had talked about, or the last from the porch series, from the balcony, from the Sun Deck series. I had talked about the potential. I said the Fed is not going to raise rates. They're going to meet this week, and in fact, we went from 75 at the beginning of January of 2026. We went from an estimate of 75 basis points of rate cuts now to the Fed funds futures market is pricing in over one rate hike. I firmly believe that's not going to happen, and I articulated why going through the breakdown of the CPI, and the recap was that 40% of CPI is housing and shelter. That's in a downturn. Energy is only 6.3% of CPI, and that's broken down. Only 3.2% is what catches everybody's eye in terms of oil and gasoline and diesel and products. The other 3.1% is residential electricity generation and more mundane, boring stuff. So CPI is going to have downward pressure. We saw that in the last report. Obviously, there's going to be oscillations. However, I believe that's going to give the Fed room to not raise rates. We're going to find out on Wednesday. And then what I was thinking of the last, couple days is that, I alluded to beneficiaries of that may be some of the mortgage related securities yesterday. I also think, and I listed some other things, but I think precious metals and precious metals are a microcosm of the markets here because there was an extreme amount of speculation in the precious metal complex in gold and silver in January, end of January, January 30th was the top. Ironically, that was my late father's. He's been deceased for a long time, but that was his birthday, January 30th. But that marked the top in the precious metal complex this year. We're already, into July, almost August. So there's been a long time that has passed. The speculative uh, money in that sector has been routed. Has been, people went on to other things. You had the momentum tech trade that surged at the end of March, and part of the reason the precious metals are down is the dollar's been stronger. But part of the reason the dollar is stronger is that you've had a lot of money from overseas flowing into uh, U.S. investments, particularly the technology-led investments. So, assuming that those are breaking down and retail's walking away, and the Fed doesn't raise rates, and they actually, if there's more of a drawdown in the tech sector, it'll augment the case for lowering rates because you're going to have pressure on CPI from housing and shelter, and then you aren't going to have the inflationary pressure from this runaway tech market. With sentiment at rock bottom in precious metals, there's a reversal opportunity. So, and I think, unique to today is that the precious metal miners' balance sheets are really good. Newmont's 11, 12% free cash flow yield here. Barrick, similar. Their balance sheets are in great shape. They're not dependent on, one or two mines. They're diversified. They're buying back stock. So the precious metals led by the largest companies are in great shape. And if you go down the market cap spectrum, the free cash flow yields are even higher. I mentioned in a note that Sibanye is like a 25, 26% free cash flow yield here. Sibanye was above 21 in January. It's now in the 8 range. So if sentiment is at a bottom, and if we make it through this week and you start to see interest rate expectations reverse and go back to what we were earlier in the year, where there were 75 basis points of rate cuts expected, then you could really see the precious metals complex turn around here. So that would be an ideal one to keep a focus on. Look at key levels, technical levels, see if they break and break out. And precious metals have a history of leading the commodity complex. So that would be there's with sentiment as low as it is and retail being out of that area of the market, that's a avenue that money could come back into if the narrative changes. And remember, one of my sayings is narrative follows price. So, and we've seen that a little bit with Cleveland Cliffs lately. As it has turned higher, the narrative has started to change. Look for the same to happen potentially in precious metals if the interest rate environment, the prospective future interest rate environment changes. And I think that we're at a ripe time to do that. So the next one of these will be from Oahu, hopefully. I thought about skipping today, but you get on a roll. And again, I want to write because I have a lot of stuff to write about. I just haven't got a window of what I need to write something. And so look for that. and I want to try to do the FAM DCA buys before the end of July here to get back on track with those. It's a golden age of active investing. I believe it's been that way since 2020. Doesn't mean it's going to be easy. The volatility, the immense volatility, and we're seeing that day to day, week to week, month to month, is very difficult to navigate because it's hard to be in positions and have big drawdowns, and it really tests your conviction. Another one of my sayings is conviction must be earned, not borrowed. The only way to do that is to continually do research and sit in positions and use the scientific method of testing those. Made me think of David Titus. The last time we talked about the bigger picture. I want to set the table with that in our next podcast. So with that, say goodbye to me. Say goodbye to Maui. Wish everybody here. I think the storm's supposed to arrive on Tuesday, and there's a rock over there by the beach that says it was deposited by a hurricane at one point. It got thrown up from the ocean waves, but there's a real steep drop off here from the just what you see the land behind me into the ocean. So that is protective in a way because it protects the surf and swells, but it still, it's you forget that they have hurricanes. You think of it in Florida more, but they're out here too. So God bless everybody out here. Hopefully everybody's safe, and we'll see you guys next time I do one of these.